Well, welcome traders to followmetrades.com Saturday scanning session. Thanks for registering and for logging in here and joining me Saturday morning, at least where I'm at. I'm just south of Seattle, Washington State. Make sure you can locate the chat feature so that you can ask questions. Some folks are new, maybe your first time here at a session with me or first time using the Zoom webinar platform. So you should be able to find a little chat icon, click it, you'll get a chat box up, and you'll see some folks are already typing in some greetings there. And good morning, I appreciate all the greetings from subscribers and folks who have been to my sessions before. Hey, I'm really looking forward to this. We're gonna try and find some great trade setups for the upcoming week. But first, again, make sure you can find that chat box and type in where you're calling in from so you make sure you can find that chat feature and use it okay. And it's always interesting to see, we typically have people from all over the United States, all over the world calling in. So there we go. Carrie's calling in from Las Vegas, Ohio, Sarasota, Florida. Well, Mike, thank you. He says great webinars. Diane's calling in from Dallas. Al from Wisconsin, San Francisco, Baltimore. Gaz, London, England. There you go. Al from Knoxville, Raleigh, Edmonton. There's our first Canadian. Portugal, Eduardo. Nice. Malaysia, Bob from Calgary. Eddie says, okay. Not sure if that's a thumbs up or Oklahoma. Charles from Quebec. Awesome. Well, thank you. And again, welcome to everybody. And again, this is Saturday scanning session. I'm gonna talk about how I scan for trades, and then we're gonna actually apply those techniques and see if we can find something good, handful of good trades for the upcoming week. Hey, Richard's calling in from Rockwall, Texas. Gerardo from Toronto. Excellent. All right. Well, let's go ahead and get started here. Finding great trades, I say it's like a needle in a haystack, right? There's over 6,000 publicly traded equities, stocks. There's, a couple thousand more ETFs. Which ones do you trade? Finding the great candidates, it's like a needle in a haystack. We try to make that just a little bit easier. So I'm going to show you how I do it. Some scanning techniques that I use to kind of sift through that haystack and find the really good candidates. I'm going to share the trades that I find, and if you like what's going on here, I'll extend an offer so you can follow along with me during the week as we take some of the trade candidates that we find. Before we get started, just a quick reminder, I'm a trader, I'm not a financial advisor, I'm not giving financial advice. I'm going to share the trade setups I'm looking for, some candidates that either meet or are close to meeting my criteria, and trades that I might take. But if any individual acts on this information, it's strictly the decision of each individual. Only you know what's appropriate for you. And of course, all trading and investing involves risk, and we need to manage risk. And I'm going to talk about how I do that a little bit deeper into the session here. So I'll introduce myself if you are new and you haven't met me before. And I'll go ahead and turn my camera on so you can see a real person here. So I'm Dean Jenkins. I'm the founder of followmetrades.com. I've been trading and investing for over 25 years. I really got started when I worked for Intel Corporation, and they offered, employee stock purchase program and incentive options. And, I joined Intel in 93, and by like 96, that stuff was worth some money, and it got my attention. And I started trading, the dot-com stocks. And during that time, I got my MBA from the University of Washington, and I was all into fundamental analysis and earning statements and balance sheets and doing all this stuff. And, well, it was just got mixed results. You have a great company, and for some reason the stock would go down, and you have a lousy company and it would go up, and it just didn't seem like things worked the way you thought they should. And I actually totally gave up on the market for a while in 2007. I got lucky. I went to cash. I go, this is just too hard, and so I missed the crash, and that was just pure luck. But I couldn't stay away. I was totally intrigued by the market. So I got back in after the crash as the market started coming up, and I got into some great trades. I bought Bank of America at $5. It went to $12, and but I was still stressed out because I didn't have a trading plan. I didn't know how to manage trades. I didn't know how to manage risk. And you've probably been there where you got this big gain, and you're, oh, You know, is there going to be more that I don't want to miss out on? But what if it goes down and I give my profit back? So I got interested in technical trading about 2010, really started digging in and studying that. And like most people, I made a lot of mistakes and went down a few wrong paths. And, you know, people had, oh, here's the course, you know, the magic indicator. And, you know, I finally settled in 2012 on the system I have now. And I started getting consistent profits. 2015, I launched this company, Follow Me Trade. So for just about 5 years now, I've been providing training materials, mentoring, coaching, and trading signals to subscribers. And George is asking if the volume too low. Is the audio good for everybody else? Just thumbs up or yes. You know, maybe check the volume on your machine or George. Yeah, Jamie says it's fine. Okay. Yeah, Eduardo. So everybody else, Eduardo from, I think it was Portugal. So if he can hear me in Portugal, yeah, everybody should be able to hear me. Rick says it's good. Okay. So I did just want to introduce myself. I'll go ahead and turn the camera off so that's not a distraction anymore. All right. So just a, you know, quick introduction. And, you know, I do have a website, and I do, you know, I do publish trades, and I do, you know, send signals out to my subscribers. And you can, you know, if you're interested in my track record, it's on my home site, followmetrades.com. You can see there's a table here summarizing the annual results, and you'll see, you know, we're clocking pretty good, you know, averaging, you know, say 25%. Last year was a little rough, but, you know, the thing here is that these are transparent results. They're audited by a third-party CPA, right? And these are real. You don't see pictures of Lamborghinis and yachts and, you know, villas in the Mediterranean. You know, these are real results, real trades that I'm taking in my account. There's no nonsense here about getting rich quick, right? We're looking for good, solid returns. We're not making promises about turning $5,000 into 5 million, because that's not real, right? You guys know that. Okay, so a little bit of housekeeping. So ask questions as we go. Absolutely, use the chat box. If a question comes up or a comment, you know, it's an informal session. I'm going to sit here and walk through what I'm doing, drink my coffee, and just hopefully you have a good session as well. All right. Al says, what clues, how did you know when to get back into the market? I didn't have a clue, Al, right? I was shooting blind. Back then I didn't have a trading system like I do now. So pure luck, to be honest. All right. Okay, so I'm going to explain the setups that I'm looking for, the trading system that I'm using now, what criteria. I use some specific technical analysis tools. I'm going to walk through how I scan using these tools, and I'm going to find some great trade candidates, I'm pretty sure. And then I'd be happy to take a look at any stocks or ETFs you're interested in, you know, using my techniques. You know, I may love some of your ideas. I often get trades just like this in a session like this. People, hey, take a look at XYZ. Oh, that looks good. But I probably won't like all of them, right? Because I'm pretty picky about the trades I take. I have specific criteria. I'm going to summarize the trade candidates that we find at the end, some actionable trades for next week. And if you like what's going on, I'll have an offer so you can follow along with my trades on an ongoing basis. So stay with me if you want to get the most out of this. All right. I like a couple quotes here. I always like quotes from smart people. And, you know, I think this is appropriate as we start looking for trades, right? Here's Benjamin Disraeli says, the secret to success is to be ready for your opportunity when it comes. And that in trading, that means having a trading plan and criteria you're looking for and doing like we're doing just now. You know, it's rare to sit down at my PC during the week, during the trading session. Okay, I want to trade, and, you know, let me go find something. Typically it's done through a session like this ahead of time, where I identify some candidates and some kind of next criteria, and then I wait and watch. I put them on what I call a watch list, and then when they're, you know, when the final criteria is met, then I can go take the trade. So they kind of come to me from my list rather than me kind of chase them in the moment. And Louis Pasteur says, you know, in the field of observation, chance favors the prepared mind, and that's what we want to do. We want to have a trading plan, and we want to have specific criteria, and then go look for it. All right, here's some things I've learned about trading. over the years after having made lots of mistakes is you need a trading plan, right? You have to have specific criteria, a written down black and white trading plan. And I think these three things in any trading plan are essential. You got to have, your trade setups defined, and that your system has to have, high probability outcome, at least an edge, right? That it's better than 50%. The higher the probability, the better. And you got to have great reward to risk in your trades. And that means that the amount that you could win if you're right in your trade setup, your thesis about what's going to happen next, that you would make more if you're right than you would lose if you're wrong, right? And I'll demonstrate this on charts as we evaluate trades. I want a good reward to risk ratio. You got to manage risk. This is the foundation of any trading plan, right? You got to, some trades are going to lose. And so you got to keep the losers small, and you got to keep the winners big. And you got to have a specific method that you follow for managing risk. And then you got to have a way to manage trades once you're in it. Because once you place the order, you get in a trade, it's difficult not to be a little bit emotional about it, especially if it's, if it's winning, it's going well. And, you don't want to just, I'll just close it, take the profit. You want to have if it starts going against you, you want to have a very specific black and white set of criteria about what you're going to do in a trade, how you're going to take profit, close for a loss, or when you're going to ultimately close the trade. It's just important that those are written down as rules. So in terms of my trade setup, the tools that I use three main analytical tools. I use Dow theory, which is all about a trend. I use Ichimoku Cloud, which is, I'm going to show you what it looks like on a chart for me. But Ichimoku Cloud is moving averages. It's nothing more than a unique way of calculating and analyzing three moving averages. And I use Elliott Wave. And I want to know whether I'm in an impulsive or corrective wave. I know some people kind of roll their eyes. They've looked at Elliott Wave and they think it's too complex, too subjective, and that Elliotticians, the practitioners, can't agree on wave counts and all that stuff. Well, all that stuff is true, unless you take a very simple approach to it. And that's what I do. I take a very, very simple approach, and I'm simply looking for, hey, is there a big move going on, an impulsive wave? Is there a correction that is taking place or has taken place? And then is there a continuation of the original trend? I'll show you how I apply that to charts, okay? Again, the overriding criteria that I want is a high probability outcome and a great reward to risk ratio on the trade. So Dow theory. Charles Dow, founder of the, he started the Wall Street Journal back in the late 1800s, early 1900s. He wrote a series of editorials in his newspaper, the Wall Street Journal, on his theory of how markets work. One portion of that is about trends. And what he said was, hey, you got a bullish trend, and it's identified by a series of higher highs, higher lows, higher highs, higher lows. And as long as that pattern continues, you're still in an uptrend, a bullish trend. A downtrend is a series of lower lows, lower highs, lower lows, lower highs. It just seems so simple when you see it and when you have it explained, but this is powerful information, because you want to know as a trader, did a new trend, has a trend begun and has it ended? So, you can tell a trend is beginning when you put in a high, higher low, new high. When you go above that prior high, that's evidence that a new trend is beginning, and then that trend is intact and continuing until it no longer does it. Then, all of a sudden we don't put in new highs, we put in a lower high, and then we go below the prior higher low. That's a pretty good sign that that trend, at least that leg, that portion of the trend is ending, okay? So this is helpful, because if you're in a trend and you're in a winning trade and it's going up and then it starts pulling back, you go, oh, should I get out? Should I get out? Should I get out? Right? What this allows you to do is set up some rules for, I'm going to get out if it goes below here. Now, what that means is you're never going to call the perfect top or the perfect bottom in a trend, but you can tell when it's ending. And I take profit along the way, so you don't lose it all, give it all back. But this is just helpful tools to analyze, right? Are we in a new trend? How long has the trend been going on? Is it ending? Same thing for a downtrend. It begins low, lower, high, new low. Ends when we don't put in new lows and we start taking out prior highs. Simple, and but it's powerful. And you'll see me apply that as we analyze charts. Okay, I told you I use Ichimoku Cloud. Ichimoku Cloud is a series of moving averages calculated different than some of the ones you may be familiar with. Probably familiar with a simple moving average or exponential moving average. Right? A simple moving average is calculated by taking the closing price of X number of price bars ago and plotting a line. Ichimoku Cloud looks at the highest high, highest low, divides it by the look back period. So it accounts for all price movement. And then there's ultimately three lines, three different time periods used to create the indicators, right? The typical approach to Ichimoku Cloud is you got this Kaijun, Tenkan, and then you got the cloud. I take those off. What people are looking for typically is you want to see price break above the cloud and you want to see a crossover of the fast line over the slow line. Well, if price broke through the cloud, there's always a crossover, so you don't need to muddy your chart up with it. But you can see it's really good at telling you when a trend has begun, and you can confirm it, right? You can combine this with Dow theory. Because here's a high, higher low, new high that just broke above the cloud. Could be a trend beginning, right? And then it also is really good at predicting support areas in the middle of a trend when it's just, higher high, higher low, higher high, higher low, predicting support. And the thickness of the cloud tells you how strong the support is in an uptrend, and then the downtrends can be red. So how thick this cloud is tells you how strong the support is, and you can see when a trend change occurs, it's at a relatively thin area of the cloud. So it's really helpful in that way. And I'll show you how I have it up on live charts. So Elliott wave theory. Again, some people don't like it. It's all right. I use it in a very simple way. So this was developed by a guy named Ralph Nelson Elliott in the 1930s. Interesting, he was working on this at the same time Goichi Hisato was developing Ichimoku Cloud over in Japan. But what Elliott says is, hey, it looks like collective investor psychology moves between optimism and pessimism in natural sequences or waves. And so we see what we're concerned with here is wave 3, 4, and 5. Those are the waves we try and trade. So 3 is a big impulsive move, right? You see, wow, price really took off. At some point, every impulsive bullish trend is going to correct, right? Trees don't grow to the sky, and trends do not continue forever. At some point, there is profit taking and a shift in psychology, and there's a correction. So you can trade wave 3 if you see it beginning using Dow theory, Ichimoku Cloud, right? You can trade a new trend. You can follow it all the way up. At some point, there's going to be a correction, and you can predict where that's going to go to using Fibonacci retracements. After the correction, there is quite often a continuation, another impulsive move onto new highs before the whole thing ends, and then there's a complex correction. So we just trade wave 3, 4, and 5. Those are the clear, powerful moves. Right? So I apply that when I look at a chart. I look for a wave 3, a wave 4, or a 5, and try to trade whichever one we're doing. So risk management, you just have to determine, you have to use risk management. You have to determine how much you're willing to lose on a trade. And it has to be a pain-free level, an amount that will not be a setback. I use 2% of my account. And that some people misinterpret the 2% rule. They think, oh, that means you put 2% of your capital into the trade. If you're trading a $100,000 account, you put $2,000 into a position. That is not the application of the 2% rule. It's saying we don't want to lose more than 2% on any given trade, right? And then I use a formula, and I just take, what is 2% of my account? In this case, 100K account, it would be $2,000. You take the predetermined stop, which I use support levels or resistance levels. I subtract my entry price, gives you the loss per contract on options, loss per share on stock. And you go, okay, if I'm going to lose $1 per share, then I would buy 2,000 shares. And then I also make sure I'm not spending more than 15% of my account on any given position, because then you're exposed to gaps and black swan events and stuff like that. So that's my approach to risk management. Trade management, you can get into a great setup, you can have great risk management, you can still blow the thing by managing it wrong. So it means taking profit at the right time, adding to the position strategically. You can actually add to your position as long as you don't increase the risk. Doubling down on losing trades is a terrible strategy, but adding to winning positions after the stop's been moved is totally legitimate. You want to stay with winners, let them run as long as possible, and you want to exit the trade at the right time. Those are elements of trade management that I use. And also, you know, I got a chart. There's a real trade I took a couple years ago on Vail mining. And so you can see here's my wave 3 entry right here, as we have higher highs, higher lows, higher highs, higher lows, and price breaking above the Ichimoku cloud. So there's where we took the entry. And then we manage the trade. High, higher, low, high, higher, low, right? I trail my stop starts at this low, and then I trail my stop as new higher lows are established, right? Take profit along the way, take it, you know, a third, and then finally we're going to get stopped out as that final previous support level gets hit. We're going to close the trade, right? Here goes, so this was wave 3 in Elliott wave parlance. Here was the correction, wave 4, into a Fibonacci retracement zone, which is between 38.2 and 61.8. And then here comes wave 5, right? And we got a high, not taking it yet, higher low, new high breaking above the cloud. So as it came out, we took a new entry, stop was here, we trail it up, and, you know, take a third, close the trade. So that's how it runs. All right, let me ask, a couple questions came in. Sean's saying, do I maximize, you know, do I have a max number of trades open at any given time? It's really determined by capital, right? You know, if I'm putting no more than 15% of my capital into any given trade, that implies, right? Say I am putting 15% in, that implies that I'm going to be limited to, what is it? You know, 8 or 9 trades, something like that. So, but you know, we've also taken profit on some of them. We don't enter them all at the same time, so it frees up capital. But it's really driven by how much capital is available, right? And I don't trade on margin. I trade options mostly, so I'm, you know, you don't run into those capital limits. JC's asking about that histogram on the bottom. It's not a MACD, it is a price oscillator. In this case, I'm using one from a company called Traders Coach. It's called the OWL, Optimum Wave Locator, but it's essentially a price oscillator, not MACD. And Connor's asking, you know, if I don't have enough contracts to take a third, yeah, if, you know, typically I talked about taking profit in third. Sometimes if you're trading with options on a higher priced security, maybe, you know, following the rules, you only had the capital to buy one contract. In that case, you just let it run to the end. And Tom's asking what % of my trades are options. So these trades that I talk about here, when I publish them to my subscribers, and here's the details, like of 2020. So far, we've closed 13 trades this year. We've made 12%, and the indexes are up about 3. So we're blowing away the indexes. And you can see my risk management and reward to risk that I was talking about is being employed, because the losers are small relative to the winners. That's what we want to do, right? I always put the details here of, you know, you can see I traded these. This one was a shares only trade on Office Depot, but the rest I traded with options. But I published the information so that, you know, the people who are following along with my alerts, you can trade them with shares or options. I prefer options, but everything is driven off of the underlying chart. We take all our signals for entry and exit from the underlying chart. And then the only question then is, you know, how do I trade it? Do I buy shares, or I'll go, you know, if it's going up, I can either buy the shares or I can go buy a call contract, and I have specific criteria for which contract I trade with. And I don't do spreads. Spreads have a terrible reward to risk. So I just take a directional trade using, if it's a bullish trend, we'll go buy a call option, and people go, but, you know, aren't you worried about time decay and, you know, all this? I have a method in my contract selection of absolutely eliminating the issue of time decay, and you put delta to work for you, and you know, you leverage your money and you do well. So I hope that helps. You're welcome. All right. I just showed you, you know, the trades we've closed so far this year. Let me show you what the setups look like. Let's pick one of our really nice ones that we just closed earlier this year. ECL was a good trade. Let me pull it up here on a live chart. So I'm using TradeStation, and you can see I've got the Ichimoku cloud here on my chart. I've got this price oscillator on the bottom. I've also got a 200-day, which is this thick white line, and a 50-day simple moving average. I like those as well, right? So ECL, this is about as clear as it gets. JC, do I only use wave 3? I'll trade wave 3, 4, or 5. And in this case on ECL, we were trading wave 5. And so I'll get my pen out and I will draw what we were doing here real quick. So this, I said, I like a simple version of Elliott wave. When I come and look at this chart, here's what my eye sees. Big impulsive move. Well, this is 3, right? I see that a correction happened and it came to this Fibonacci retracement zone. So that's 4. Now I'm expecting a 5. That's it. That is all. That's not a very good 5, is it? That's all I'm looking for, an impulsive move, a correction, and a continuation. I can trade this, take an entry here. I can trade this, take an entry here, if there's enough profit, and I can trade this. And look, I talked about Elliott wave, right? What I see, you know, oh, wow, I got a 3, I got a 4, I'm looking for 5. Right? What do I see? High, higher, low, high, higher, low. Breaking through the cloud. I took an entry right here. It doesn't look like much, but we were going into earnings and I didn't want to hold it through earnings. So we closed this trade here. But that was 196 up to 207. That's a beautiful trade, right? Beautiful trade. And we made on the options contract, we just caught a nice impulsive move, a portion of it. And we were trading the February 21, 192.50 call, and we made an 85% profit in 15 days. 85% profit on the capital we had into that trade. So that's what we're looking for right there. Right. And Tom says, on average, how many option positions do I have open at any one given time? I have between, it'll vary. Like last week, we just closed a bunch of trades that were, you know, ready to close. We're in the middle of earnings, so we have to navigate around earnings. We're closing them before the event. We got down to 2. The highest I've ever had is 10. I'll show you what I got open now. I got 4 trades open right now. I got 2 short trades, JBL and Kimco Realty, 2 long trades, EXE, IIPR, and you can see the current PML on all those positions is positive. We just got in, so it's getting started. You know, the options are positive, net positive as well. This one's down 20 bucks, but net result here so far for 4 open trades is they're doing good, they're in profit. So about, you know, 4 to 10 would be the average number of positions. All right. So here's how I, you know, finally scan for some trades, right? Hey, you're welcome, Tom. Connor says, if we hit a black swan, wouldn't the puts go up and the calls go down? Well, you know, the black swan, you know, it could have, you know, a big event could happen to the entire market. Not everything's going to go down, right? But the indexes could go down on bad news, or, you know, war breaking out, or coronavirus, you know, is everywhere. You know, who knows? There could be bad news, and the index would go down. And if you're holding puts, they're going to go up in value, and if you're holding calls, they're going to go down in value, right? And so that can apply to an individual stock, you know, bad news, right? The CEO got fired, or, you know, their products kill people, something happens, right? Or it can happen to the whole market, right? So here's how I go find trades. First thing I do is I just step back and go, what is going on? What's the big picture? And then I create a thesis, right? A thesis is, here's what I think is going to happen, and this has to be proven or disproven. I don't trade based on my thesis. It just gives me an area of the market to go look at for, and then I'm going to, you know, only take trades where, you know, the evidence is present for the thesis that I had, right? And it could be disproven, okay? But it just gives me a focus, because there's 6,000 or 8,000 equities to trade. You got to narrow that down to a manageable list. Then I go look at charts, right? You got to go look at charts and scan and identify some trades. So I'm going to do that right now. I'm going to go show you my big picture, kind of my thesis, and then we're going to narrow this down to a set of charts to look at and see if we got any trade candidates. After I get done, be happy to take a handful of ideas that you have and charts you'd like to look at, and I'll offer my analysis and thoughts, okay? So what's the big picture right now? Saturday, February 15, 2020. Relative to the market, right? So coronavirus on everybody's, you know, mind. is the market worried about it or not? Well, a little bit. You know, we got the market at all-time highs. Last week put in a new high, all the indexes. And let's go look at the S&P 500. Here's the S&P 500. You know, this is the main index, right? So last week put in all-time highs, intraday and closing highs. Let's pop that out a little bit. All right. Earlier in the week put in highs, and then it went a little flat, didn't it? Went down one day, and Friday was up just a little bit, right? Interesting, we're not getting big percent moves like we were, right? We had some, you know, 2-3% days going down, going up. It's gone a little flat. And then also look at this separation from the 200-day moving average, right? So typically, as you get this separation there, you can expect some kind of reversion to the mean, even if it's not a major, you know, earth-shaking correction. You can just see quite often we get a reversion back to the mean, which is the 200-day moving average. So would be no surprise if that were to happen. Could press on to some more highs. What I'll do is just trade the reality of what it's actually doing, looking for price patterns. If there's a low, lower high, new low. Because here it didn't happen, right? We had, oh, look, it's pulling back. And then it went on to new highs. That's an uptrend, according to Charles Dow. Nothing changed. It is normal to get pullbacks in an uptrend. A trend change looks something like this. Low, lower high, ooh, right? We had pretty good correction back at the end of 18, didn't we? So if we see something like that forming, I'll get excited about shorting the index, but not till then. So that's part of my big picture, right? It's on to new highs, but you know, let's just watch. FOMC is going to do absolutely nothing in terms of rate hikes. They're just going to keep watching, so we don't have to worry about that until things change. There's really no major economic reports coming out next week to worry about that are going to be market moving. We're in the middle of earnings season, and it's kind of a mixed result. You know, some good results, some bad results. There's no big direction on that. We do have to navigate earnings. You know, you want to know when earnings are announced. You don't want to go, oh, look, I'm going long on a stock, and then they report in the morning and it blows up your trade. Right? You want to be aware of it. You can use earnings reports to your advantage, but you definitely want to be aware of it. The other thing, oil may have found a bottom, right? Oil's gotten beaten up over the last few months. Let's just look at the oil futures, crude oil, light sweet crude on a daily chart, right? Can you believe it was up at 65, right? A month and a half ago. And here it got under 50. But what do we got here? At the bottom, some really clear support, right? And a high, higher low, and pressing into a new high. So we could see a move up in oil, and that could create some opportunity in companies, you know, oil and energy related companies that have been beaten down with this. And Trevor, yes, I'm recording, and assuming that the technology works as expected, I will be sending out a recording, okay? So I'm looking at oil going, there could be a move in oil that we could use to our advantage. So that's part of the big picture. Gold could have some more room to the upside. If I look at the gold futures on a daily chart, right? This is in a wave 5. This is 3, 4, 5. It's that simple. But it's consolidating, right? It made a nice move, and then it's kind of going sideways. So if gold continues to move, and I'll kind of ignore that wick, and if I see it go here, then it has a chance of running up into this Elliott Wave 5 target zone, these green lines. So I'll watch that. There could be some opportunities. You can trade the ETF, GLD, or some of the miners really would move proportionately much more than the ETF. And so I think right now we'll watch gold, we'll watch oil, but individual stocks are where the action is. I'm not going to try and trade the index until we get, you know, clear sign of something else happening. And so individual stocks, and what I'm looking for, it seems that I do have ways I can go analyze sectors, right? Go which sectors are showing strength, which ones are showing weakness, right? Is there any opportunities? I did that yesterday. I was going, well, anything in the sectors, and there really wasn't anything in the sectors that goes, oh, here's this real strength or weakness that I can go exploit. So for me, it's what I'm looking at today in this focus is I'm just going to go zoom in on individual stocks. And what I want in an individual stock is there are some opportunities of things that are not moving with the indexes at all. They're just off doing their own thing. And I think in this environment, that's where my opportunity lies. So I'm using TradeStation. I got a scan set up here for just this kind of situation. And I'll show you what my criteria was. What I'm looking for, I'm running this scan. I'm looking for, ultimately what I'm looking is new breakouts, okay? But I'm gonna filter some stuff out. So I want price above $2. I don't mind a low price stock, but I don't want penny stocks. I want volume on average to be above 1 million shares, 10-day average. I want real liquidity. I want market cap above $1 billion. And then I'm looking for, this SMA flag is a 200-day moving average. It's an indicator I wrote. So I want things that just crossed the 200-day moving average and they're still within 5% of it. What that means is something that crosses the 200-day moving average tells you that there could be a trend change. But I don't want ones that crossed and gapped and broke away and now they're 20% away. But I ran that scan yesterday and came up with a list of symbols. And then I put these symbols on this radar screen. And JC says, do I have a scan for a wave 3 beginning? This could be. These breaks above the 200-day moving average could be the beginning of a wave 3. So yeah. And it also could be a 4 or 5, right? And so, you know, here's what I've got. I'm looking at, you know, here's the symbols. It's nice to have what sector they're in, what the price was. I look at the open interest for options because that's important to me because I typically like to trade with options, right? And then here's the 200-day. It's how many days since the price crossed the 200-day moving average, and then what percent are we from the 200-day? And then also, where are we at on the Ichimoku cloud? Are we above the cloud, below the cloud? Because being above it, remember, is bullish. Being below it is bearish. And so I look, and I just look at like this BDX symbol, right? We're above the 200-day, below the cloud. So it's kind of a mixed thing, right? So is this one, this ALEX, right? We're below the SMA, we're above the cloud. But I can sort and filter this thing any way I want. And one of the things I can look at is what's called new, right? Did price just break below the Ichimoku cloud? Oh, well, those are interesting. And so I look at these candidates, right? And oh, AXL is below the 200-day and it's just broken below the cloud. Well, that's worth looking at a chart. So what I do, I got this linked to my chart, and now I just start doing a visual inspection of the chart. And you know, I think ultimately you got to put your eyes on a chart, right? And so let's look at this one, this AXL. I'll bring it up. Okay. So I see it just broke. Here's why it showed up. It just broke the 200. It just broke the cloud, but it's not the first time. And this has been a massive, massive downtrend. All right. So it made it through the filter, but that's not what I'm looking for. You know, this thing may continue down. It's got potential support, right? It's too late in that downtrend for me to try and chase it. So yeah, it's worth looking at. And typically I'm going to look at 10 to 15 charts before I find a good one. That's okay, because I can do them really quickly. All right, so I'm just going to click through this list that we came up with, and because it's just sitting, it had a nice 3 down, and now it's just gone sideways. It's going nowhere, so not good. 3 up, 4 down, failed 5. It's in a complex correction. I don't trade that. And once you train your eye, you can just see this really, really quick. And again, you got to go through a lot to find good ones. Same as this is same as that CSFL. Nice 3 down. Now it's going sideways, going nowhere. And you'll see what I'm looking for when I find a good one. No. Okay, this one is interesting. And here's why. And I haven't seen this one before, so you're seeing this real time. So here's wave 3. And by the way, here's wave 3. Here's 1 and 2. Here's where the trend started. Right? 1, 2. And then finally, it went sideways for a while, but we finally had a good correction, wave 4. And now what do we have? Pretty good evidence of this next move beginning. And so I'm kind of interested in this. And what I'm going to do is quickly measure the wave 4 correction. And it went a little bit above the sweet spot here, but it would be disqualified if it went above 76.4, but it didn't. So it's still good. And now I want to know what the target zone looks like. Okay, and the wave 5 target zone for this, get rid of those, the drawing, is down here in these green lines, right? And down here in this area. And you can see this prior low is in that area, and it's a, you know, it's a big pivot. So this, I would set my target here just above that pivot. Okay, let's say the target's right there, 858. If I were to get into this trade, right, I want to see it. It's got a nice low, lower high. I want to see a new low, and right now it's above. It's above the 200, and it's in the cloud. All right, so I'd like this to, let's get below this little thing here, right? Let's get below that little support area at a minimum. And then it would be below the cloud, it would be below the 200. So that's where I would want an entry. And I'll draw a blue line there. All right. Blue is the little color code I use for my entries. Then when I come back to this chart, I can remember, you know, what I was thinking. I'm going to put my stop at this high, right? You know, one tick above this high. That's going to be my stop. That's where, if I took this trade and price went up to that level, my whole thesis about it would be blown, because it would then be a high, higher, low, new high. Oops, not a downtrend. So that's where I would get out. And then this is my target. Pretty nice target. And you can just visually see, without doing any math, we have a good reward to risk. The risk is the distance between my planned entry and my stop. The reward is the distance between my entry and my target. And you can see this is 451. That's what I'm looking for right there. Okay, so that's a good candidate. And what I do is I put that on my watch list, which is just another radar screen I got over here. Get things out of the way. And that price is 1070, and the symbol's VLY. I'll put alert. If it goes down to 1070, send me a text message, which TradeStation will do, and then I'll come look at it. Make a few notes here. And remind myself what I was looking at. So it was wave 5. There. So I found a candidate, and I'll come back and look at it. And one of the things I'm going to check, in fact, it could disqualify it in the short term, is I want to know what the earnings data is. I just don't want to be surprised by that. I can use that to my advantage. And there's certain ways to do that. But what I don't want to do is be blind to it. So this is a good database, Earnings Whisper. I don't care about their Whisper indicator. I just like that they have a very accurate database. So they're saying, hey, the date right now is April 30th, but it's not confirmed. Okay, so, but it's not coming up like Monday. Well, it wouldn't be Monday because it's a holiday, but it's not coming up in a couple of days. So that's fine. Okay. And then Raj is asking, hey, how many days to expiry would you choose when choosing an option contract? So we'll take I think probably a lot of people are interested in that. So let me take a quick look. I'll show you what we would look for. Pull up the option chain. What was it, VLY? So we know that the earnings are going to be sometime in April, right? And what I want in my contracts is I want plenty of time. If you look at this chart on VLY, right? It's going to take a while. It's going to take a little while for this to play out. So we're probably going to be holding it maybe all the way out till its earnings, right, in April. Here we are, February, March. Yeah, typically we're in these from 2 to 6 weeks, but I want room if it's going to run. I want room, right? So what I'm going to do, and choices are limited here. We got the March 20s, which are expiring in 34 days, or the Junes. We'll take the June. And you go, oh, but you're paying so much for time. Not if you do it right. Not if you do it right. Because we're going to go deep in the money. This thing's trading at 11 bucks, right? So if we can go deep in the money on this and get a high delta. Let's see what the $10 will get us. 70, so it's 72, oops, sorry. Yeah, you got a delta 72, you're going to pay 200 for the 10s. Well, look, the Junes are cheaper, 195 bucks. We're not paying for time. And since the delta is so high, since it's so deep in the money, right? What we're really paying for here, you see this intrinsic versus extrinsic. Extrinsic is time and IV. We're just paying for the in the money. All we're really doing is buying these contracts on leverage. Right? We're not paying for time. We're not paying for IV. So that's a real. So we go buy the Junes, the June 10 calls for 195 a piece, right? And then hold those things. And if price goes our way, and we're going to make a ton of money, right? These things are going to nearly double in value or triple. And I'm sitting here looking at the calls, and now I'm, oh, this is a short trade. So we would flip that around. We're going to buy puts. Right? This was a short trade. All right. This one's going down, so let's buy puts. Right. Same analysis. We're just going to go to the other side. We're going to go deep in the money, and we're going to look for a high delta. Here's the 12s. Right. We're going to pay $1.50 for the 12s. And they're $1.30 here, so a little bit more, right? But we're not paying much for time. We got the same intrinsic extrinsic ratio. So there we go. Yeah, Tom was typing that as I caught it. Okay, so that's my approach to getting a contract. And if you're right and this thing moves down, you have the unlimited profit potential, unlimited. Right? If this thing moves and goes down to the target down to 850, if it moves $3, what's that option contract price going to do? It's going to go up 3 or 4x, 300 or 400%. So somebody asked about spreads. So anybody who knows, what's the max profit potential on a credit spread? Anybody got? Just real quick. Maybe someone's typing. I don't want to get too far off track. Scott says lowest strike price. The credit received. There's Bill. It's the credit received. A credit spread is you go. You're going down here. So you go sell a put, you go buy a put, and you sell the put for more. And you get to keep the difference. That's the most profit you're ever going to make, right? Is that difference? The credit you receive up front. And if it goes wrong and you lose, you could lose 3 or 4x the credit you got. So you got $100 credit per pair up front, and if it goes wrong, you could lose $300 or $400. Just by buying the put here for what would we say they cost, right? The 12s cost 150. So you can buy a put for $150. Most you'll ever lose is $150 if it goes to zero. And you're not going to lose the whole thing because we're going to be out of it before expiry, right? If it goes wrong, hits the stop, we got to go close it. We're going to lose half that, lose $75, right? But if we're right, we're going to make $300, $400, $500 per contract. That's reward to risk. That's what I'm looking for. So, Scott, you can do diagonals. You can do diagonals. The most profitable, lowest risk, high option trade on a directional trade is long puts, long calls. You can plug that into an option scanner and just put in, I expect a 10% bearish move in the next 60 days, and you can open it to any kind of option strategy and it will always return. If I think it's going down 10% in the next 60 days, what's the best option strategy? Your scanner will always say, go long the puts every single time. Tom says he likes my thinking. Placing spread trades on TradeStation has been a nightmare. Well, yeah, so you've heard my case for why I don't like spreads, right? I think there's a place for them, But directional trading, right? Your highest return, lowest risk is always going to be going long puts or calls. I know that flies in the face of maybe many other webinars or articles you've been exposed to. A couple comments about the bid-ask spread on this particular issue. So on the $12, yeah, the ask is $1.50. The bid is 70. We got decent open interest here. So, right, what I do is go try to get the best price. You know, I really ask myself, what am I willing to pay for it? And then go, you know, put a limit and get the best price, right? These are a little bit farther out in time. You can see the near term, it's a little bit better. So this is a little on the thin side, but there's enough open interest for me to trade that one. All right. Well, we got a little bit off topic, but it seemed like that was things that were people who were interested. Let me keep scanning through this list and see if we come up with any more. Johnson Controls. So Johnson Controls could be in a wave 4. So even though it was up the last couple days, we're interested. Yeah, it already got pretty close. So this actually could be 5 starting here. I'm not sure. It's way too early to start analyzing that. So that was just a quick look. Not interested. Look at this thing, New York Mortgage Trust. Looks like an EKG of a sick person, right? This thing just channels. You could swing trade this short term between these, and it's right in the middle, so it's not a good place. So Aflac, yeah, it's just gone dead. Eugene says ventricular tachycardia. You a doctor, Eugene? John says, really screwed up, thought the start was at noon. Well, it's recorded, John, so you can watch the recording. So sometimes we run these scans and we get something super interesting, and then sometimes nothing. So here's something interesting. This is a low-priced pharma, right? There, would anybody agree that's an impulsive move from $24 down to $2? But it looks like it's trying to get up off this bottom, doesn't it? Now, what's its retracement potential? It's massive, right? Up into here. We could also look at potential failure points at prior resistance levels. So as price broke down, right, it couldn't get up through that level, right? But what if it only got to there? We keep in mind this bigger potential, but what if AMRX only went from 491 to 755? Well, it'd be a good trade, wouldn't it? It would be a very good trade. It would be. Jim is asking about bid-ask spread. That's why you only trade, you know, stuff with good open interest. And that bid-ask spread was a snapshot from the close at Friday, when there's typically a little bit of volatility at the close, right? So, you know, you're not guaranteed to lose that, right? And by the way, if it goes in the money and the bid-ask spread is unacceptable, you can't get the price, you can exercise. If you buy that put contract, right, and you know the thing drops $2 or $3 into the money, and you don't like the price of the option, you can exercise it, take your profit that way. So you always have that right as an option buyer. So you're kind of protected there. All right, so if we were to take this trade, we had a target, you know, kind of a interim target there. Let's say I'd kind of be interested if it broke above here, right? As I look closer, it's got these highs that it hit. Okay, so now if my entry was up at 581, and I would put my stop at this low, so we just squeak in, right? Because I want this to be bigger than this. I never take something that could lose more than it could make. And I think, you know, here's a conservative target, it could go bigger. So if this breaks, that's a real big deal, right? This had this big move. It's pinged in this channel. If it breaks again, it could be taken off. So I'd like to come look at this chart if it hits 581. So I'll just put it on my watch list. Doesn't mean I'm going to take the trade. It means I want to keep my eye on it. Okay, that's how we approach this. I got to get back to that symbol. AMRX at 581. It doesn't cost me anything to keep an eye on it. And you can see I've got a pretty well developed watch list here. And in fact, this trade that we just took on Friday, 14th, IIPR, we put that trade on Friday morning, and that was off the watch list. You can see I had a blue line drawn here. Go, hey, if it goes above 96.63, which is a higher low, new high, I'm pretty interested. Look at this beautiful 3, 4, here comes 5, right? I was interested. I go, boy, if it hits this level, I really want this trade. And Friday morning, bam, it triggered. We got in, and guess what? It's already a couple points in profit, and there's still room to get in on this trade. Remember, here's my entry, my stop, my target. Beautiful. And so that came off my watch list, you know, ping, it hit, it triggered. I got a text message, I got a pop-up. I took the trade, I sent it out to my subscribers. Robert, is it too late to take IIPR? It is not, because the answer to that question is always about reward to risk. And if you were to take here, current price, the risk is between here and the stop, and the reward is between here and the target. So this is still bigger. This is still good. Not as good as here, but still not bad. Right? And Susan said, what's the minimum open interest I'm looking for? Yeah, like, you know, 400 or 500 total contracts across all strikes for a given expiration. All right, I know I got several of the subscribers on. Did you guys get into IIPR? Get that alert and take that trade? If so, let people know. Bill says he did. So Bill, you're happy, aren't you? Susan took it. Pavlos. Oh, yeah. Mike says you don't trade options, but CFDs. You know, everything works off the underlying chart. So once you get a good trade set up on an underlying chart, then, you know, you got a directional high probability move with a good reward to risk, you know, however you want to trade it. Tom says, do I have a live trading room each day? Monday through Thursday, we do a live trading room. Yeah. Stephen took it. Oh, Bill says his wife's happy because he took that trade in her Roth. There you go. I do a lot of trading in my wife's account as well. Richard said, when did that alert come out? Friday morning. All right. So let me take any, yeah, Tom, the trading room's included in the monthly subscription. Everybody gets it. You get automatically enrolled every week. Greg, okay. Yeah, we're going to take a few requests here. Anybody would like me to look at their stock? I won't get to all of them, but I'll do my best here to get. So Greg wants to look at eBay and Twitter. Okay. So eBay. So it had a big move down. It had a big move up. This was too far, I would bet. Yes, it crossed this line. So it was disqualified as it went forward up. So that's okay. This is now the impulsive move up. This was the correction, and now we're looking at wave 5. So this has a pretty decent target, wave 5 bullish target on it. Up above 42 bucks, this green zone. It's looking pretty good. They announced earnings, right? They had a high, higher low. You know, you might want to let it break out of this. You might want to just make sure this trend is really going to get going, get above these highs, right? And if it does, then you probably got a good clear shot up to a midpoint of 46. Twitter. Not real good, right? It's just swinging at random. Had this big gap down. It's in the midst of filling this gap. You want to watch these gaps. these gaps can present resistance areas. And so you can see it's kind of failing here at this low before the gap. So it's a bit of an erratic deal. So you just want to be careful about something like that. Tom wants to look at big. Lots or something. Yeah. It's been in a long, long downtrend, and it's got these steps, right? Boom, then it goes up. Boom, then it goes up. Looks like it's ready for another boom. You'd be joining an awfully long downtrend. I like newer ones, but you see how it's in the middle of the cloud and finding support, hitting the 200 up, hitting the 200. If it were to break clearly down below the 200 and the cloud, get down to about 24.14, you could have a run down to the prior low as a target, and you just want to see what your stop would be. But if it breaks here, it could be going down to here. Terry wants to look at Boeing. One of these days, you're going to get them airplanes back in the sky, you think? So it's in a correction, right? It had the big move up. It's in a correction. It's kind of a long sloping downtrend. You can see how it hit the 200s reversing. There may be a short-term short play, but it's mixed. It's got these, low, lower high, low, lower high, right? But it hit it, it reversed, but you got the cloud under it, you got the 50 under it, potential support areas. And I just don't really like it. I think there's more active things to try and trade. I would not try to go long on this yet because it's still in a downtrend, low, lower high, low, lower high, right? Till that reverses and you start getting highs, higher lows, highs, higher lows, right? It's in a downtrend. URA for Al. These are my opinions, right? You could disagree. These are the analysis techniques I use and what I see. So my first thing catch my eye, trades at very low volume. So I don't trade low volume stocks, right? The volume on Friday was 46,000. So that is too thin for me. It's in a big long downtrend, and look how it's hitting the 200. So it's a little late to short this thing, and there's no sign of it breaking up yet. It's above the cloud, above the 50, but not above the 200. Till it broke through there, I wouldn't be interested. So there's just too late to short, too early to go long for me. Mike wants to look at VTR. Okay, that's interesting. Mentos. Yeah, so this is the impulsive move. This is 3. It had a really clear 4, and looks like it might have a 5 starting to measure. Yeah, it was a little deep. Went past the 76.4. So this could be a new trend. You could take it long. It just doesn't meet my rules. I've just learned over the years. Boy, there's a lot. There's no way I'm going to get to all of them. I'm sorry. AMD, well, it's a rocket ship, isn't it? It is just off to the races. It's a little late to chase. I don't chase mature trends, right? The entry was back here as it took out these prior highs and was above the cloud. That would have been an awesome entry. It's just it's too late, right? This is a very mature trend. You can see it's losing momentum. No sign of no place to short it yet, but yeah, I just don't get in that late. Mike, let's look at Gilead. Traded Gilead a number of times in the past. So it could be breaking. It's been in this long, painful downtrend. Looks like it found a bottom, a high, higher low. It's trying to get going. That could be worth watching. Yeah, it does look like a new trend trying to form. So it's interesting. ENB. I'll do 2 more, and then we're gonna have to wrap it up. We're past 9 o'clock already, and want to respect your time. not a perfect chart. You'd have to call this wave 3. You know, before this, it was just kind of a complex deal. This is a clear impulsive move. See, too late to go long, but you would wait to see. You got a low. See if you get a lower high, new low, and there might be a shorting opportunity. It is not there yet, but I would not chase it long either. You can get away with that, you know, but you just don't know when that's going to end, and so that could really be painful. Okay, sorry I couldn't get to all of them. Question, do we look at futures in the trading room? I pay attention to intraday futures. I do not trade them, but I pay attention as we're in the trading room. I look at S&P 500 at gold and oil and see what's going on intraday and if that's something we should take action on, but I don't trade that. And Beth, I'm using in TradeStation. Yeah, the Marabella, the dark moving average here is 200. The lighter one is the 50-day. And Bob said the sound was choppy. Yeah, everybody earlier said the audio was good. And we are going to do we do have a recording, and we will send it out to everybody when it's done here. All right. Final question, do I use multi-time frame analysis? I do. If there's a clear trend on the daily chart, the daily is my my go-to, my main interval charting. But I'll go look at a weekly chart for confirmation of trends, and I might time an entry on a 60-minute chart. Yeah, or if we're managing the trade, look for new support levels, new stop levels, sometimes on a 60-minute chart. All right, let's come back to wrap up the presentation right here. Hey, so we found a few good trades. Found new ones. I shared with you my open trades, which still have good entries, and my watch list. So, it was worthwhile session, I think, and we came up with a couple new ones that look pretty good. Just a reminder, come back to, I think these 3 things are essential. You got to have great trade setups, good reward to risk ratio. You got to have an edge. You got to manage risk. You got to manage the trades, right? You guys believe that? Do you believe that having these things, if you do it right, will make you a profitable trader? Type in ES, raise your hand. There's a little raise your hand button. JC says yes. Diane says yes. Got some hands going up. There you go. Okay. Yeah, I think most people would agree, right? Most people would agree. You got to have this stuff to be successful. All right. How many of you are excited about some of the trades we looked at? I showed you the 4 open trades that we got. Some new trades. Anybody excited about those? Maybe, yeah, I kind of like to take these trades next week, but maybe you're a little unsure how to act. Which contract should I choose? How do we manage the trades, right? Maybe you feel like that guy. It's like, man, that was a ton of information. It was intriguing, but it was, that was a fire hose, right? So if you're interested, I'll spend a few minutes going over a special offer related to the trades we just talked about, and about trade setups, risk management, trade management. You can follow along with what I'm doing. Hey, thank you, Rick. That's a nice comment. It always enjoys hearing me present. Well, I enjoy you showing up here, Rick. That's awesome. All right. So remember, finding great trades is hard, right? There's a big market out there, and once you find them, you got to have a plan. You got to know how you're going to manage it, right? And so I offer a stock pick service, right, where I provide all of that. I find the trades, I send alerts, and I give you the tools for risk management, and then I send you out signals for the trade management, right? And I've got a good handful of customers, and they are pretty happy. In fact, I know several of the customers tuned in to watch the scanning and look for trades. And if any customers here, if you guys want to type in a quick your thoughts on the service, make sure you change the chat settings to panelists and attendees so other people could see your comments. All right. So what's it worth, right, to get this? The average monthly return on the picks running about $1,900. You get 10 hours of detailed trade consultation per month in the trading room, in our chat sessions. That's not cheap to go get that one-on-one. Ongoing education, in the chat room, in the live chat sessions, I provide lots of training, answer questions. I've got training material that I provide as part of the package. You know, that stuff adds up, right? You could easily spend $5,000 on those things individually with me or with another service, right? But I'm going to offer you this, you know, great trade setups, risk management, trade management, detailed trade consultation in a trading room and live chat sessions. You get the offer of a one-on-one consultation with me when you sign up, and you get ongoing education and, you know, winning trades, right? And it's not going to cost you $5,000, right? The list price for my service, if you go to my website, it's $127 a month, $1,500 a year. It's good value at that price. So I'll give you a special offer today. If you know you're here in this webinar, and that is you can sign up for $37 for a 30-day trial. So I'm pasting the link into the chat box so you can see the link there. And boy, I sure appreciate all the nice comments that the existing customers are typing in. You guys rock, man. Thank you. Thank you. Totally distracted now, but I so appreciate it. You know, you customers, you guys are awesome, and I do my absolute best to provide a legit, transparent, and valuable service. You guys are telling me that you're getting that. It's awesome. Okay, so you know, if you're new, you can try it for $37 for 30 days, and it's $97 a month after that, which is a discount from the list price, and it's 100% money back guarantee. No questions asked, no hard feelings. If you try it during that 30 days, you go, oh, that's just not a good fit. You just send me an email and I will give you 100% refund, no hassle, right? That's just how I think business should be done. That's how I do it, okay? And then there's a special offer. Oh, wait, here's everything you get. You know, what do you get when you sign up for the subscription, right? You get the watch list of potential trades that I found. I just showed you guys the watch list. I put it on a spreadsheet, put it on the website. You get alerts, email, text message, and now we're using Telegram messaging app. So when I get into a new trade, you get an alert. Hey, new trade, here's the trade parameters. You get the exact details, entry, stop, target. The trades can be traded with shares or with options, your choice. I provide the details to trade it either way. You get alerts, email, text message, Telegram, when I make a change, move for the stop, take profit, close the trade. And you get access to a live trading room Monday through Thursday. You can attend if you like, it's not required, and we record it. There's a recap as well. So you got access to a trading room where you can come ask questions, see us just like today, looking for trades, managing trades. We have a live chat session Wednesday evenings. You get a one-on-one consultation when you sign up. You get a link to my calendar and we can meet and get you off to a great start. I provide risk management, option trading tools and training. When you sign up, you'll get access to those. And ongoing support and training. You know, one of the things I hear from customers is just really appreciate the level of support. You know, questions get answered, you know, within a business day, and folks really seem to like, you know, the level of support we provide here. I think it's Charles saying, what if you never traded options? Not a problem, trade the shares, right? And then if you want to work your way into options, I provide some material and support for that. So, hey, thanks, nice comment there. All right. And there's more. Oh, but wait, there's more. If you sign up during this session, right, before we hang up, I'll give you a bonus of my Ichimoku Cloud training course. So I have a course, study program. It's got study guides, written PDF study guides. It's got training videos. It's got a printable trade setup cheat sheet. You know, that course list for $247 on my website, you can get it for free today if you take the trial, right? So I just posted the link again if you would like to take that trial for $37 and get a free bonus of the Ichimoku Cloud course. That you know, if you sign up later, that's fine. You can, you know, you can still get the trial for $37 for 30 days, but the bonus of getting the Ichimoku Cloud course is only available if you sign up now. And Eugene says, well, I share my radar screen settings as well. Absolutely, Eugene. And not only will I share my radar screen settings, but for my subscribers who want it, I've got a custom indicator. I got a handful of custom radar screen indicators written, and I offer those for free as well. So you get settings and a free radar screen, a couple indicators. My email address, Tom, it is, I'll type it in here. Gene@followmetrades.com. There you go. All right, any other questions? Yeah, the radar screen is for TradeStation only. I don't have anything written for TOS. Everything I do here, you can do in TOS, but I'm not a user. So, JC, how many picks on average per week? 2 to 3. 2 to 3 per week is the average. Tom, you are very welcome. Eugene, sounds awesome. Well, I think it is awesome, and the customers think it's awesome too. So, thank you. Bob says, do I still use Vantage? Yeah, I do still use Vantage Point in my trading as one of the tools. Vantage Point is an artificial intelligence prediction thing. You know, all the tools, there's no one indicator that I lean on, right? What I like to see is all the indicators, the tools kind of align and point the same way. That increases the probability of the trade. And Eugene's asking, only take it if it's above 200. Again, just kind of my last comment. I look at all the indicators, right? All the analysis techniques. And it's rare that you get every single thing in alignment. But if you get 4 out of 5, 6 out of, 5 out of 6 indicators going, yeah, this is the next thing, then that usually is pretty good. Scott, yeah, I use Bennett software as well, right? I try to bring, whatever tools I can. And it just depends on the market conditions. Today I showed one scan. I have 4 or 5 different methods of scanning based on different market conditions. And, one given time, one scan will yield the good trades. Well, hey, thank you so much for everybody who showed up. I appreciate you spending your time here with me on a Saturday. I know that's really valuable time for most folks. And so I just appreciate you being here and for your interest and engagement. There was some great questions, and I sure appreciated it. And Mike, nice comment there. Says he's been with about 3 months, getting good value out of it. Awesome. All right. Hey, everybody, you guys too. Have a great weekend. No matter what you do, trade safe, use risk control. Don't take big losses. Keep the winners big, the losers small. All right. I'm going to go ahead and stop the recording now.